welcome back to another video. So today we're going to take a look at the Usdjpy from a technical, fundamental and order flow perspective and look for the best probability to take an opportunity in the market there as well. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the content, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments below exactly what it is that you would like for me to cover in my next video. So first things first, let's start with the technical data. So firstly, we can see how the market had printed a strong level of resistance. Now this level over here acted as resistance once, twice, and then once again. The market then finally broke above that and came to test it as support. Now the market had also printed this impulse and we had that correction. So if you take your Fibonacci there from the low to the high, you can see how the market had tested and rejected the 0.382. And we're going to use the minus 27 as a target because we can see that the bullish momentum is quite strong and we've got the minus 27 lining up perfectly with that previous level of resistance that the market had printed. Now from a weekly perspective, market structure is quite easy to read. Why? Firstly, we can see how the market had been stuck within this consolidation phase. What happened was the market then pulled back, broke above this level of resistance, tested it as support, and we can see how the market is starting to move to the upside now as well, giving us a further indication that we can definitely expect to move to the upside. Now, from a daily perspective, what do we have? Now, the most recent structure that the market had created is sitting at this level. Why? Because this level of here acted as a level of support, market broke below that, came to test it as resistance, and we can see how this resistance is being broken, but then support. So the best way that we are going to approach the situation, what we are going to do is we're going to wait for the market to slightly pull back higher, then pull back, start looking for buying opportunities for the market to go and test that previous level of resistance as identified from a monthly perspective. In doing so, the market will not only give us a W formation, but also an inverted head and shoulders, and both patterns are considered bullish patterns from a technical perspective. The next thing we are going to look at is the sentiment data. Now this tells us what retail traders are doing in the market, and looking at the last data we received, we can see how 66% of retail traders are short and how 34% of them are long. And like I always say, you always want to be on the opposite side of retail traders are doing, and if retail traders are selling, then we definitely want to be buying. So that's basically where we are with the sentiment data. And for those of you that don't know, this data basically tells us retail positions in the market. The next thing we are going to look at is the order flow data. Now this tells us what the big banks, hedge funds and institutions are doing in the market. And based off the last report for the dollar index, we can see how the market, our hedge funds came in and they added 1,979 long positions. They also added 358 short positions. But we can see how the overall net positions increased from 33,765 to 35,386. Now if you look at the Japanese yen, we can firstly see how the market came and they closed minus 5,267 buy positions. They then closed they added 1,747 sell positions. Now we can see how the overall net positions had increased from minus 59,148 to 66,162, giving us a further indication that we can expect the Japanese yen to get weaker in the short term. Now the next thing we are going to look at is the fundamental data. Now today we had the Kremlin GDP that got released. For those of you that don't know, the Kremlin GDP is a gross domestic product that reflects changes in the market value of goods and services produced by domestic economy. Now in the reporter quarter compared to the previous quarter as well. So the US GDP is basically calculated based on expenditure. Now for those of you that are not familiar with this, but the Kremlin GDP is made up of the trade balance, the US IPI, the retail sales, NFP and unemployment. And if you look at the data for last month, we know that the unemployment rate for the US dollar was quite low, so the numbers came through good. The NFP numbers was 476,000, meaning that new jobs were increased, so that data was positive. The retail sales were up as well. The US IPI, which is the US industrial production, was good last year as well. The trade balance, which is the YOY, which also looked quite positive, and as a result of that, we could see that the GDP for the dollar had also reacted to that data as well. So that gives us a further confluence that the current economical state of the USD is quite strong. Above all of that, we know that the Federal Reserve is also going to come through next month and start that interest rate hikes, which is then further going to increase the value of the DXY as well. Now, the best way that we are going to approach the situation, as always, we have to be reactive and not predictive. We have to learn to adapt to the ever-changing market environment. So we're going to wait for that clear break, and once the market had broken above that level, so we're going to wait for a clear break, a daily break to close above that level. Then on the retest, we will then wait for the market to pull back to at least 0.32, giving us a 0.32 pullback, an inverted head and shoulders, as well as a W formation in the market as well. Now that's all from my side, and as always, cheers for ears.